Hey everyone! Welcome back to the channel. If you're an American paying taxes and you're not using these IRS loopholes, you're leaving thousands of dollars on the table. Money that could be in your pocket legally. I'm not talking about shady offshore accounts or risky tax dodges. These are 100% IRS compliant strategies that wealthy people, freelancers, and even everyday employees are using to save big in 2025. Last year, I used these exact loopholes to save over $10,000 on my taxes, and in this 20-minute guide I'm breaking it all down for you, step by step with real examples and practical tips you can start using today. Whether you're a side hustler, a small business owner, or just someone who wants to keep more of their hard-earned money, this video is for you. Stick around until the end because I'm also sharing a free IRS loophole checklist to make sure you don't miss a single dollar of savings. Let's dive in. Oh, and hit that subscribe button for more money-saving hacks like this one. Brain Section 1. What are tax loopholes and why they matter? Before we get into the juicy details, let's clear up what a tax loophole actually is. Don't worry, it's not some sketchy trick. A tax loophole is simply a legal deduction, credit, or exclusion written right into the IRS tax code. These are rules designed to encourage certain behaviors like starting a business or saving for retirement, and they're available to anyone who knows how to use them. The problem? Most people don't. The wealthy and their accountants have been leveraging these for years, saving thousands, or even tens of thousands, on their taxes while the average American overpays because they don't know these exist. In 2025, with tax laws getting more complex and inflation eating into our budgets, using these loopholes is more important than ever. Today I'm going to share 5 powerful strategies that can save you thousands, whether you're a freelancer, a small business owner, or even an employee with a side hustle. These are the exact methods I've used, and I'll show you how to apply them safely and legally. Let's get started with the first one. Pushpin Section 2. The top 5 IRS loopholes for 2025. Alright, here are the 5 IRS loopholes that can save you $10,000 or more in 2025. I'll break each one down with clear steps so you can start using them right away. Grab a notebook because you're going to want to jot these down. Loophole 1. Home office deduction. If you work from home, even part-time, you can deduct a portion of your home expenses like rent, utilities, and internet as a business expense. This applies to freelancers, side hustlers, or even employees with a home-based side gig. And here's the best part. You don't need a fancy office. A desk in your bedroom or a corner of your living room counts as long as you use it regularly for work. Here's how it works. If you pay $1,500 a month in rent and your home office takes up 10% of your home's square footage, you can deduct 10% of your rent. That's $1,800 a year. Add in a portion of your utilities and internet, and you're looking at $2,000 to $2,500 in tax savings, just for working from home. To claim this, keep a simple log of your expenses and measure your workspace. Loophole 2. The S-Corp salary trick. If you have a side hustle or small business, this one's a game changer. By setting up your business as an S-corporation, you can pay yourself a reasonable salary and take the rest of your profits as distributions. Why does this matter? Because distributions aren't subject to self-employment tax, which is a hefty 15.3% on top of income tax. For example, if you make $75,000 a year from your side hustle and set up an S-Corp, you might pay yourself a $40,000 salary and take $35,000 as distributions. That saves you self-employment tax on the $35,000, which could mean $5,000 to $8,000 in savings annually. To do this, you'll need to form an S-Corp. Services like LegalZoom or a local accountant can help for a few $100. Just make sure your salary is reasonable for your industry to stay IRS compliant. Loophole 3. Retirement account hacks. Saving for retirement is one of the best ways to cut your taxes, and in 2025, there are some new opportunities to maximize this. First, the Mega Backdoor Roth IRA lets you contribute up to $69,000 to a Roth IRA if you have a 401k through your business, way more than the standard $7,000 limit. You'll need to check with your accountant to set this up, but it's a powerful way to save tax-free for retirement. If you're self-employed, the SEP IRA is even better. You can deduct up to 25% of your income, up to $69,000 in 2025, toward retirement savings. For example, if you earn $100,000 from freelancing, you could deduct $25,000, slashing your taxable income and saving thousands in taxes. These accounts are easy to set up through platforms like Vanguard or Fidelity. Loophole 4, the Augusta Rule. This one's my favorite because it's so simple yet so powerful. Under IRS Section 280AG, you can rent your home to your own business for up to 14 days a year, completely tax-free. Let's say you have an LLC for your side hustle. You can rent your living room for a video shoot or a meeting at, say, $500 a day. That's $7,000 of tax-free income for the year, just for using your own home. To make this work, draft a simple rental agreement between your business and yourself, and keep records of the rental days. This is 100% legal, but it's one of those rules most people don't know about. Loophole 5. Health Reimbursement Arrangement, HRA. If you run a small business, even a one-person operation, you can set up a health reimbursement arrangement, or HRA, to cover your family's medical expenses. Think doctor visits, dental, vision, even prescriptions. The beauty of an HRA is that these expenses are tax-deductible for your business, saving you thousands. For example, if you have kids and spend $5,000 a year on medical costs, an HRA lets you write that off, potentially saving you $1,500 or more in taxes, depending on your tax bracket. To set this up, work with an accountant or use a service like Take Command Health to create an HRA plan. It's a bit of paperwork, but the savings are worth it, especially for families. Bar chart Section 3, Real-Life Case Study. Let's make this real with a case study. Meet John, a freelance graphic designer earning $75,000 a year. He was paying way too much in taxes until he started using these loopholes. Here's how it broke down. Home office deduction. John works from his apartment and deducted $2,000 for his home office space. S-Corp salary trick. By forming an S-Corp, he saved $6,500 in self-employment taxes. Augusta Rule. He rented his home to his LLC for 14 days, earning $7,000 tax-free. HRA. He covered $3,000 in family medical expenses through an HRA, fully deductible. Total savings? Over $18,500 in 1 year, all completely legal. John didn't work harder, he just worked smarter using rules the IRS already allows. Section 4. How to get started safely. Now, I know what you're thinking. This sounds amazing, but how do I make sure I'm doing it right? First, a quick disclaimer. I'm not a CPA, so you'll want to consult a licensed tax professional to set these up properly. A good accountant will make sure you're 100% IRS compliant and maximize your savings. To make this easier, use tools like Keeper Tax. This app scans your bank account for deductible expenses and tracks them for you. Perfect for freelancers. TurboTax Self-Employed. Great for filing your taxes and catching every deduction. Bench.co. If you want hands-off bookkeeping, Bench pairs you with a professional to handle everything. Start with 1 or 2 loopholes that fit your situation, like the home office deduction or the Augusta Rule, and add more as you get comfortable. Your accountant can help you set up an S-Corp or HRA in just a few hours. The key is to act now before the 2025 tax season sneaks up on you. Direct hit conclusion. Don't leave money on the table. Alright, let's wrap this up. The wealthy don't pay less in taxes because they're sneaky, they do it because they know the rules. Now you know them too. By using the home office deduction, S-Corp salary trick, retirement account hacks, the Augusta Rule, and an HRA, you can save $10,000 or more on your taxes in 2025, completely legally. I've shown you how I saved over $10,000 last year, and with a little planning you can do the same. If you found this video helpful, give it a big thumbs up, hit that subscribe button, and ring the bell so you don't miss my next money-saving tip. As a special thank you, I've put together a free 2025 IRS tax loophole checklist in PDF format, with all the strategies we covered, plus a sample Augusta Rule rental agreement. Grab it in the description below. It's completely free and will help you start saving today. Drop a comment and let me know. Which loophole are you most excited to try? Or do you have another tax question I can answer in a future video? I'll be in the comments to help. Thanks for watching, and I'll see you in the next one.